Join me as I take on the challenge of finding the best investing secrets to profit during a recession crash. When the economy takes a downturn, smart financial moves can make all the difference. Investing during a recession can seem daunting, but it's also an opportunity to make strategic decisions that set you up for long-term success. Many people fear investing during economic downturns, and for good reason. The uncertainty can be overwhelming. But this fear often leads to missed opportunities. A common misconception is that all stocks will plummet during a recession, which isn't true. Some companies, especially those in defensive sectors like healthcare or utilities, tend to be more resilient. Another misconception is that you need a lot of money to invest during a recession. The truth is, even small, consistent investments can add up over time. What's more, some investors avoid the market during downturns, which can result in lower stock prices and better buying opportunities. The media often portrays recessions as uncharted territory, fueling anxiety and indecision. However, history shows that markets have always recovered, and smart investors can profit from this knowledge. It's essential to separate emotional decision-making from sound investment strategies. Some investors also believe that recessions are unpredictable and that it's impossible to prepare. While it's true that predicting the exact timing and impact of a recession is challenging, being informed and adaptable can significantly improve your investment outcomes. So, what are the specific investment strategies that can help you profit during a recession? One approach is to focus on undervalued stocks with strong fundamentals. These stocks may have been oversold during the market downturn, offering a buying opportunity. Another strategy is to invest in defensive sectors, which tend to perform relatively well during economic downturns. These sectors include consumer staples, healthcare, and utilities, which provide essential goods and services that people will continue to use even during a recession. Diversifying your portfolio is also crucial during a recession. By spreading your investments across different asset classes and sectors, you can reduce your risk and increase potential returns. This can include investing in bonds, real estate, or other alternative assets. A key strategy to consider is investing in dividend-paying stocks. These stocks can provide a regular income stream even during a recession and can help offset potential losses. One powerful investing secret that has historically led to significant profits during recessions is to look for companies with strong balance sheets and low debt. These companies are better equipped to weather economic downturns and can emerge stronger on the other side. Another secret is to invest in industries that are less correlated with the overall economy. For example, companies that provide essential services or products such as waste management or cybersecurity tend to perform well even during a recession. By focusing on these types of companies and sectors, you can position yourself for potential long-term gains even in the midst of economic uncertainty. It's not about taking excessive risks, but about making informed strategic decisions. The effectiveness of these strategies lies in their ability to help you navigate market volatility and make the most of the opportunities that arise during a recession. To recap, profiting during a recession requires a combination of smart financial moves and the right mindset. By understanding common fears and misconceptions, exploring specific investment strategies, and revealing powerful investing secrets, you can set yourself up for success. If you've learned something new from this video, share your own experiences in the comments below. And if you're interested in taking your investment strategies to the next level, be sure to check out my next video on advanced investment strategies.